Let's send it over to CommSec now. Tom Piotrowski is back from his holidays. How are we looking today, Tom? Good to see you, by the way.
Good to see you, Pete. Thanks. The market's going to kick off with a loss this morning, down by around 0.7%. So counterintuitive, Pete, when you consider that we saw some very impressive improvements where the US markets were concerned on Friday, owing to the fact that we saw some much better than expected employment figures. More than 350,000 jobs were added to the US economy in the last month, and that's a quantum higher than what the market was expecting. So whilst it was much stronger than expected, stocks still rose. The belief being that the US Fed is threading that difficult needle, Pete, when it comes to the balance between getting interest rate settings right and indeed the strength of the economy. So it's pushed back the possibility of a rate cut in the near term. But the markets gave all of that a bit of a pass because they were encouraged by earnings numbers as well. Meta, the Facebook parent, up by 20% on much better than expected earnings. They had their best quarterly revenue figures in about 2 years. They announced a maiden dividend. So that was one of the factors that drove the marquee technology stocks higher. You had the NASDAQ up 1.7%, the S&P 500 up 1.7%, and the NASDAQ up by about 1/3%.
All right. Tom Piotrowski, thank you.